Hello and welcome to this managerial accounting video where we will be preparing a direct materials purchases budget. We'll be using the problem shown on the screen, which is exercise 514 in the managerial accounting textbook by Davis and Davis, 2nd edition. If you don't have the data handy, you might pause the video and print the screen. So let's take a look at what our requirements are here. Here's a company that has a new window cleaner, and the cleaner requires two ingredients, the AM972 and CA38. They give us our budgeted production for the upcoming year. Let's go down to required. They want us to prepare McKenzie's AM972 purchases budget for the coming year. Alright, so we're given information about two different direct materials ingredients, but we only really need one for our budget. So let's change the color of the font here, or you could highlight or underline, so that we only find the information about AM972 because we're not interested in CA38. Alright, so each gallon of window cleaner requires 100 ounces of AM972. The other thing they tell us here, an ounce of AM972 costs 15 cents. Also, McKenzie requires ending inventory equal to 20% of the next quarter's production needs. And finally, their beginning inventory is going to be 80,000 ounces of AM972. All right, so let's get started. We're going to make a heading. Call this McKenzie Chemicals Direct Materials Purchases Budget. And for the upcoming year. Okay, so we're going to set this up by quarter. So let's call this first. I'm just going to put Q, first quarter, second, third, and fourth. And then this will be year. And over here we're going to have a little bit of next year's information that we're going to need. We'll just say first quarter next. Okay? All right. So our direct materials budget. What do we need? We need to know how many units of finished product we're going to produce, and that's in gallons. And then for each gallon of finished product, how many ounces of direct materials we need. So we have two different measurements here. We have finished products in gallons and we have direct materials in ounces. So we're going to convert those. All right, so let's start with our budgeted production. If you had just prepared a production budget, that's where it would come from. All right, so here we have the budgeted production given to us. And I'm just going to carry this across. Okay, and then this is going to be, we're going to add these up to get the total for the year. And our first quarter next is the 6,000. Okay, so that's our budgeted production for each of the 4 quarters and then for the year as a whole. All right, so now we need to convert the production, and this is finished product of gallons, into production needs, which is going to be how many ounces we use per gallon. So we're going to multiply this by standard number of ounces per gallon. Okay, so it tells us that every gallon of window cleaner requires 100 ounces of our finished product. All right, so we want 100 all the way across here, and this is going to give us our production needs. All right, so this is going to be a multiplication. So it's going to be the production times number of ounces. Okay, and that's the same all the way across. Put this over here also because it works for next year as well. All right. Okay, so now we have our production needs. So that's the number of ounces. Let's put here, just to remind us, This is the number of ounces. Okay. All right, so remember, if you looked at a production budget, which you probably did before this, we take our total needs, and then we're going to add to that how much ending inventory we want at the end of each quarter. So let's add our budgeted ending inventory for each of these periods. All right, so our ending inventory is usually defined as a percentage of the following quarters or the following month's needs. In this case, it tells us they want 20% of the next quarter's production needs. So this is going to be equal to 0.2 times our following quarter's production needs. And we can carry that across until we get to the fourth quarter. All right. And in the fourth quarter, we want to say this is going to be equal to 0.2 of the following year's first quarter production needs. Oh, I did that wrong. So equals 0.2 times the 600,000. All right. Now, our ending inventory for the year is equal to the ending inventory at the end of the fourth quarter. All right. Okay, so we're up to our budgeted ending inventory, and this is going to give us our total direct materials required. And this is all going to be added. So this is equal to the 500,000 plus the 150. And then we're going to add those all the way across. Okay. So now the last thing we're going to do is take out our beginning inventory, right? Because this is the total that we need, but then we're going to have some stuff on hand. So let's subtract our beginning inventory. All right, so at the beginning of the first quarter, our beginning inventory is equal to 80,000 ounces. They've given that information to us. Add a 0 there. Okay. Now, the beginning of the second quarter, our inventory is equal to the ending inventory of the prior quarter. All right, so the beginning inventory for second quarter is ending inventory for the first quarter. All right, so we can drag that across, and we have our beginning inventory for each of the periods. Now, our beginning inventory for the year is equal to our beginning inventory at the beginning of the first quarter. All right, and now we're going to say our budgeted purchases. And this is going to be ounces. So this is always going to be equal to this minus that all the way across. Okay, so what I like to do is, since this was a subtraction of the 3470 minus the 80, that's how we set up the formula. I like to just double check and make sure that these all add up to the same number. So let's say equals to that, plus that, plus that, plus that, just to make sure, and we get the 3390, so we know that that's a good number. All right, finally we're going to multiply this by the purchase price per ounce to get the actual cost of the budgeted purchases. Okay, so standard price per ounce is 15 cents, and that's the same all the way across, and that gives us our budgeted purchases cost. Okay, so each of these is going to be a multiplication, and we will drag that across, and that is in dollars. Okay. All right, so that is our direct materials purchases budget and the end of this video. I hope you find it helpful in your studies. Hello and welcome to this managerial accounting video where we will practice preparing a cash receipts budget, sometimes known as a schedule of cash receipts. Here is our information. This information is from exercise 521 in the Managerial Accounting textbook by Davis and Davis, 2nd edition. If you don't have the data handy, you might pause the video and print the screen, or you could just follow along. Okay, so here's our information. In the coming year, Game Monster will be introducing its first product. And so this is going to be our first year of business. Tells us the brace is going to be sold for $12 to retailers throughout the country. All sales are going to be made on account. An expected 70% of sales will be collected within the quarter of the sale, another 25% in the quarter following the sale, and then 5% of credit sales are expected to be uncollectible. And they give us our sales budget for the following year in units. Okay, so our job is to prepare a cash receipts budget for the coming year. So we want to know when we sell these products, when will we be receiving the cash, and this information will be used later to prepare a cash budget. Okay, so the first thing I'd like to do, here we have sales in units, so let's convert this into sales dollars. So let's multiply by our selling price per unit, which is going to be $12. Right? Okay, and we're going to call this budgeted sales, but not in units. Let's say budgeted sales dollars. Okay, so this will be equal to the 25,000 times $12 a unit, and this will give us sales dollars. All right, so now that we have our sales dollars, that's the information we're going to need to prepare our cash budget. I also find it handy to make a note down here so we can refer back to it when we're going to be collecting these sales. So the quarter of sale is 70%. The following quarter is going to be 25%. And then uncollectible will be 5%. All right, we're ready to start now. So let's give this a heading, Game Monster, Cash Receipts Budget. And we'll say for the upcoming year. All right, so we're going to put columns here for each of the 4 quarters. So we'll make this the first quarter, second, third, and fourth. And then this is going to be our total. We'll have a column for bad debts and a column for accounts receivable, which are any of the sales that we made that we aren't collecting during the year. All right, so the first thing we're going to take a look at is our first quarter sales. And our first quarter sales are $300,000. So here, so that we don't make any mistakes, let's write down what we're going to be doing. We're going to be multiplying the 300,000 times 70%. Then we'll be multiplying it times 25%. And finally, we'll be multiplying it by 5%. All right. Okay, so now let's decide where they're going to go. So our first quarter sales will be collected 70% in the quarter of sales. So this is going to be equal to our first quarter sales, 300,000 times 70%. Okay, and then remember this, the first quarter sales will also be collected in the second quarter, and that's going to be the 25%. So this is going to be equal to 300,000 times 25%. Finally, the 5% is uncollectible, so let's put that over here in our bad debts column. This is going to be equal to 300,000 times 5%. Okay, we're going to follow that same pattern for all 4 quarters. Okay, so next let's look at our second quarter sales. And our second quarter sales are 480,000. Okay. All right, now our second quarter sales are collected 70% in the quarter of sales. So they're going to be collected 70% in the second quarter. So this is going to be second quarter sales times 70%. The rest of our second quarter sales will be collected in the third quarter. So this is going to be our second quarter sales times the 25%. And finally, our uncollectible is going to be our sales times 5%. All right, let's follow up with the third quarter sales. Our third quarter sales are 600,000. All right, so same thing. Now let's take a look at the third quarter. Third quarter sales, 70% in the quarter of sales. So this is going to be equal to 600,000 times 70%. And then the other 25% of our third quarter sales will be collected in the fourth quarter. And 5% is uncollectible. All right, finally, let's take a look at our fourth quarter sales. And that will be 960. You can see how this is a company that has cyclical sales, and cash budgeting comes in handy when you have a cyclical situation. Because remember, they're going to be needing money in the third quarter to buy all of the things that they're going to be selling in the fourth quarter. Okay, so in our fourth quarter, we have our sales of 960,000. 70% of that will be collected in the fourth quarter, and then the other 25% won't be collected until next year. So the 25% of our fourth quarter sales we're going to put into accounts receivable. So at the end of the year, that 25% will be waiting to be collected on the following year. And then again, we're going to put the bad debts in the year of sale. Okay. All right. So if you take a look at this here, what you'll notice is that you have two steps. When you have a 2-month collection or a 2-quarter collection, each of the columns is going to have 2 steps. Now, we're missing a step in the first quarter in this particular problem only because it's the first year of business. All right. Okay, so let's put totals here. These are the important numbers that we're going to use for our cash budget. Okay. Add our totals all the way across. And we want our totals here because this is going to be our cash collections only. Okay. Okay. All right. So now we can see our total collections for each of the 4 quarters. And these numbers here will be the numbers that you're going to carry forward to your cash budget. So your cash collections for the first quarter are going to be 210, the second quarter 411, etc. Okay? Our bad debts for the year are estimated at 117,000. And where are they going to go? They're going to end up on our income statement. And then our accounts receivable is going to be carried on to our budgeted balance sheet. Okay, so that's the end of this video. I hope you find it helpful in your studies.